Welcome back to the Blue Sense podcast. I'm joined today by Gaby and Ibra. It is, what are we now? Wednesday afternoon. Sorry, I'm sitting in Canada, so it's the middle of the night on Tuesday. It is Wednesday after Black Friday weekend. And wanted to get everyone together and just unpack what's been a fantastically successful for the Blue Sense team and portfolio. But really more specifically, let's draw some wins and some learnings out of that we can take forward into Q1 and looking ahead to next year. So I was doing some maths. Ibra, you sent through some great notes the other day when we caught up Monday. I believe we had 22 accounts had a record-breaking Black Friday of some description in our portfolio. We had a brand do their first $2 million month. We had multiple brands do their first $1 million months. And so really fantastic result across the board. But for to talk about the sort of specific things that actually drove that for the business, Ibra, I'll start with you. Like, what do you think is sort of the major media buying trend that we saw stand out differently this year?
Yeah. So essentially, I think it would come down to having a strong, scalable structure on the account. So the brands where we managed to achieve such results were the ones that we have been working with for at least 2 quarters. Obviously, we had some other cases where we onboarded them a month before and then we managed to exceed expectations. But like mainly the vast majority were brands where we have been managing the structure for at least 2 quarters, where we built something on the account that is scalable during the high purchase intent moment, just such as November and mainly Black Friday. So having a strong structure is key, and having a validated offer. That's what we work on Q1, Q2, and Q3. We test different offers, we test different products, we try to validate the winning offer in terms of performance and in terms of financial outcomes. So an offer that is driving new customers, yes, but also at a profitable degree for the business that we can capitalize on during November and December. So I think that would be like the 2 main points that we used and leveraged a lot in November. And as you said, we had a fantastic November. And actually, it's 26, not 22 accounts, by the way. We ran the numbers yesterday. It's 26.
Okay. Yeah. Fantastic. Excuse my maths. It's why I'm on the growth side of the team. Gaby, let's jump to you. What? Obviously, we have some winning formats and sort of some tried and true basics around creatives and not trying to launch a bunch of crazy new tests in a month like November when CPMs are really high. What surprised you, or what do you think stood out as the big trends across the portfolio creatively?
Yeah, I think there were some creative and also just some like basic statistics and strategic insights that we saw as well, which I'll touch on, that kind of loop back to what Ibra mentioned as well. From a creative perspective, I think everyone went in with a lot of anticipation. Obviously, this is our first Black Friday with Andromeda fully rolled out. So everyone kind of feels like, how is this year going to be massively different? And in some ways, it was very different. In some ways, it was very similar to previous years. And I think that it was a combination of... What a good time to freeze. Am I back?
We're back.
Yes, you're back.
Technical difficulties. Okay, well, we'll probably just crop that part now. But essentially, I think that there was a lot that was different this year. And then there was also a lot that really stayed the same that we see is true throughout all Black Fridays over the past like 3 or 4 years. I think that one of the major ones was brands were a lot more willing to focus on creative diversity, which is amazing during a period like this, because it's when you want to make sure you've got enough assets depending on how your Black Friday is going to go. One of the main trends was one we did anticipate, and this is really just backed on hard data that we've seen over the past years, which was keeping your assets really basic so that people can understand your promotion immediately. So if you're doing a site-wide sale, make that really clear. Like, you don't need to go overboard and high production with every single asset that you do. And I think that for the brands that got a really good 50-50 balance of it. So you're very clear marketing. So just like plain black image, slap on the text of what your discount is. And then also perhaps like some exciting UGC or a novel idea that also creates some entertainment. And that like combination married together did really well for a lot of brands. That was like the general trend we saw. But also to add to what Ibra mentioned, with the brands where we've kind of been able to work with them on a scalable strategy over the past few quarters, I think what we really got to capitalize on, and it's something that we focus on with a lot of our clients, is new customer acquisition. So we go really hard on this angle where we're always trying to focus on metrics like your new customer acquisition cost, for instance, as a good indicator of how performance is going. And for the brands where we have been able to successfully acquire new customers over the past few months, we've seen such a massive return on investment now with returning customers that we've been accumulating over the past quarter, 2 quarters, etc. So that was another trend, and that also again interlocks with your creative, because you're focusing on creative for retargeting audiences and you're also focusing on creative for your cold audiences. And if you can do something like a plain black image just with text, and you've acquired enough new customers in the past year or so that they know your brand and they just have to see that plain black image now to convert, you're going to do super well. We saw that trend. So we saw returning customers with that very basic asset, where sometimes you're literally not even showing your product, it's just your brand name and your offer, absolutely crush it across the board. It's a client that we use that asset with, it was one of the top performers, at least during Black Friday, particularly for warm or existing customers. So I think it's really interesting how you see that combination between strategy, new customer acquisition, scalable accounts, and then bringing in your creative to kind of capitalize on it.
Fantastic. So if we pivot to the things that we think have done particularly well, and we'll get a little bit more tactical, I guess, in terms of individual accounts or strategies. Ibra, there are a couple of ideas that stand out to you as best. I know you sent me a number of notes around the continuity across your messaging, the way a brand is approaching their pacing, but what are the sort of top things that are standing out to you there?
Yeah, I think this year and also last year, the intraday scaling on the ad accounts during high purchase moments during the weekend of Black Friday, Cyber Monday was a big success. As you know, I had so much fun this last weekend.
I don't think Ibra slept at all.
Yeah, it was absolutely amazing. And now, obviously, there are ways to automate this process on the ad account, but I think, there's still some fun in doing it manually and just following the trends on Shopify. And I think when it comes down to this particular practice, you must have a benchmark. And we mentioned this already on the podcast before, Scott, like mainly when it comes to pushing more spend. And we are not talking about $100 more. We are talking about 10K more at a certain hour of the day. You need to have a benchmark of how the next 4 hours should perform for you. And in case it doesn't perform this way, you need to be able to make the quick decision and just pull back and understand why it didn't perform. So what we did is, before Black Friday, Cyber Monday, we built a pacing sheet for all of our accounts where we had a clear idea of what to expect at each hour of the day, how much percentage of revenue we should be expecting at this hour of the day, and how much Meta is pacing by this time of the day. So in this way, we can calculate how far off are we, for example, from our target for that day, or if we are pacing according to the target. And then from there, we can decide whether to pivot or not. So intraday scaling was crazy this year, also last year. And evergreen campaigns. I think most of our successful accounts spent more on evergreen campaigns than on Black Friday campaigns. It has nothing to do with the offer or nothing to do with the assets themselves. It's just logically an evergreen campaign has been running for a month or 2 months. It has way more data and more stability than a Black Friday campaign you just launched 10 days ago. So essentially, evergreen campaigns held at least 50 to 60% of our budget this year. And it allowed us to scale in a really, really great way during the Black Friday, Cyber Monday weekend, where Black Friday campaigns wouldn't hold as much spend just due to the fact that they don't have enough data on the campaign level. Lastly, manual bidding campaigns, hero of this weekend for 2 reasons. So one is really technical, which is whatever optimization you are using on the ad account should be hitting a different kind of audience. So when you are running 7-day click, it's not like running 7-day click, 1-day view. And it's completely different than running 1-day click, for example, completely 3 different buckets of audience. When you are running the automatic bidding on Meta, is different than when you are running a manual bidding. When you are running a manual bidding, you're hitting different kind of audiences. You are competing in different kind of auctions. That's why it's key to enter these auctions with winning creatives that are carrying so much data and so much social proof. And that's what we did. We picked all our winners from the last 14 to 21 days, post IDs, so we keep social engagement, added them to our bidding campaign. We tested cost caps and bid caps. I think portfolio-wide cost caps outperformed bid caps this year. And it gives you a peace of mind because essentially you can push more spend knowing that the platform will not go over that unless the algorithm thinks, if the algorithm actually thinks that you can achieve the cost cap that you are setting on the campaign level. So these are the 3 points that really helped us scale. And as you know, like we have accounts where we pushed an extra 20K in 24 hours during the weekend and successfully. And we didn't see a huge dip in efficiency. And overall, it's like, massive weekend for most of our accounts, thanks to these 3 points right here.
Yeah. I think something to add just to evergreen content as well, because I definitely saw the same thing across my portfolio where as soon as we kind of launched our Black Friday promotions, especially for brands that had a site-wide sale, so your evergreen content actually starts landing on pages where people are seeing this promotion as well. Conversion rates, ROAS, everything kind of went up across the board for evergreen content. But I think an interesting difference I noticed, and I'd be curious to hear if you saw the same thing, was obviously for each brand, we go into the creative strategy aspect of Black Friday, but differently, it depends on so many things. It depends on their capacity for content production. It depends on what products are on sale, what has done well for them historically, and how different their promotion is this year. So it really does vary from client to client. But I think the general trend I saw was evergreen performed better for clients who didn't use as much evergreen content in their actual Black Friday ads. So an example of this would be, I have a fashion brand and they've got their whole own creative production team who is able to put together an entirely new campaign for Black Friday with new assets, using insights from previous years to kind of recreate similar ads, but not the same as their actual evergreen content, because their evergreen ads were actually promoting things that weren't necessarily on sale. So we had to use different assets. And in that case, the evergreen ads did really well because they were totally different to the Black Friday ads. So they complemented each other. But for brands where we were limited for assets and we actually had to take out their top performing evergreen ads and turn them into Black Friday ads, which is common. We recommend that for a lot of brands. The logic is there. You've already tested the asset. You know it's one of your best assets. So put that foot forward. And in that case, evergreen became less relevant because the Black Friday ads were basically a duplicate of your evergreen, but with the promotion on it as well. So naturally, it did perform a bit better. I don't know. Did you see anything similar to that happen as well?
Yeah, I agree with you. I think whenever you have an evergreen that is appealing to a wider target audience and is quite different than what you are running for Black Friday, that's when they complement each other. But nonetheless, like I think we had also a few accounts, as you mentioned, where we ran iterations of the evergreen for Black Friday. And we saw an uplift on the evergreen content in terms of conversion rate and CPAs on the platform. But again, like I think it's way better to have like variation between what you are running as an evergreen and what you're running for Black Friday. It comes down to, the capacity of the client in terms of producing new assets during November, like something new, something different. But I think at the end of the day, as you mentioned, if you're running a site-wide offer and the traffic from your evergreen is landing on this page, they will see the offer anyway, even if the ad didn't really mention this offer. And then again, like it comes down to the concept of how many touch points do I need to convert? Like I'm not going to convert just by clicking on one ad. So I might click on your Black Friday ad, and then I would just, I'd get distracted because Scott texted me and he wanted to have a chat, for example. So I would abandon the website, go back to chat with Scott, and then go back on Facebook or Instagram, and I would see an evergreen ad, and I would click again, and I still somehow remember that there's an offer. I would see it on the website, and I would convert from your evergreen. So I think both ways, you would see an improvement account-wide if you are running a winning offer. Differs to a certain degree when you are running widely different assets in the evergreen as opposed to the Black Friday campaigns. But again, just like also improvement when you are running iterations, you would see that the evergreen is improving more. And I think it's just because of the amount of data that you have on this campaign. Like it just makes sense that a campaign that has been running for more time, more stable, with more conversions at the campaign level would outperform a new campaign unless you're running something completely different, which is like a 60% off while your evergreen is not even sending traffic to this kind of pages. That's where you would see the difference being towards the Black Friday assets in this case.
No, I mean, this is maybe a dumb question and where it's evident that I'm not the media buyer, and that's why I'm asking you guys the questions. When we talk about these evergreen campaigns, it makes total sense, right? These are your assets that are performing really strongly year round. they are really the backbone of your account and that's driving the growth for that brand. Are we saying we're not even having any kind of variation in our messaging on those assets that's highlighting the offer, but it's actually just the generic CTA that you're pushing into the account every day of the year? That's where you're seeing these significant growths. And I think that's really important to really articulate, because I think it's sort of, in a way, it's going to sound counterintuitive, more so to our smaller brands that are listening and that may not have a media buyer in-house. That's interesting to me, that it sort of doesn't necessarily vibe with, your traditional sort of retail experience where you're used to walking into a mall and everything is just, this is the very explicit offer that is, no sort of, there's no arbitrariness to that particular structure at all.
Yeah, look, you still need Black Friday assets. Like I was delivering the wrong message, but you still need them, because it is like in the customer journey that they would need to see your offer on their feeds. And mainly during such a period of the year, like you would be seeing hundreds of ads every hour when you're on social media. So if your ads are not mentioning any offers, it would be, as you said, like kind of out of context, like everyone is running offers and you're running none. So you still need Black Friday assets. The only thing is, from a technical point of view, from an ad account point of view, when it comes to scaling, when it comes to the higher delta in terms of improvement in results, I think your evergreen would win in this case. But this doesn't mean that you shouldn't have Black Friday assets in the account running separate with a dedicated budget.
Yeah, not at all. It's just, it's interesting to me that you see that same lift happening on a non-offer asset at the same time. That I think it's important to I know that sort of goes to Nate's content from back in August when we were talking about the ramp up to Black Friday of like, the key mistakes you make of testing crazy new creative concepts and turning off the things that are winning all the time for you. If we switch to the things, perhaps the things that maybe didn't work as well this year, and what we've sort of learned from that and what we do differently or recommend. And there's a lot of noise in the market every year, I feel like, around this time, around hype up campaigns, lead generation, whatever it might be. Perhaps didn't perform as well as we have seen in the past. Who wants to start there?
I'll start there because I feel very strongly about this.
Go for it.
I'll go on the public record and say that I'm a huge enemy against hype campaigns, because I know that's a bold statement to make. There's definitely cases where they make sense. So I'll backtrack on what I've just said. But I think there's a lot of noise, like you mentioned, Scott, like external voices that will promote things like hype campaigns. And I think you just have to take the context into consideration of what your intention is with a hype campaign going into it. I'm not saying never do hype campaigns, but the way that you structure it is so important, because a lot of brands will just think putting together an asset saying, hey, we've got Black Friday coming, get excited, is enough. But the truth is that it's a very bold assumption to assume that during a period, especially where consumers are so overwhelmed with messaging and advertising, they are going to remember in their busy life and in their busy calendar that, oh, I know that this brand that I have heard about one time has got this sale coming up in like a week's time. It's not going to happen. That's not, how life works, unfortunately. So a lot of brands who kind of just wanted to release that content as something like a traffic campaign or an awareness campaign, for instance, it was hard to see and draw a tight conclusion that we actually were seeing massive uplift in conversions from people who did see those hype campaigns. Whereas if you are able to tie it with something like a lead gen campaign and create a genuine incentive for hype, so not just saying we have a sale coming, get excited and sign up to our email list because you have crazy high cost per lead still during that time, and is it still worth it then at that point? Trying to create some sense of urgency. A couple things that some of our brands did that was really smart was creating some sense of urgency. So stock is limited. If you don't get it now, you don't get exclusive access. You're not actually going to get this deal because it's going to sell out. And it's funny because for the brands that did that, some of them literally did actually sell out. Like they're out of stock now, and we've like exceeded November so hard that we need to try and recover stock for December so that we can continue to advertise. It crashed it so well with the lead gen. So creating this excitement and saying like, hey, like we haven't even started our Black Friday sale yet and we're already running out of stock. So if you sign up to this lead email, then you can get early access and exclusive discounts, whatever. And then that creates a genuine incentive, because why am I going to sign up just to like hear about your sale if I know that I'm going to hear about your sale in a few days time anyway? Like there has to be some other emotional aspect driving it and psychological force. So that did really well. And to add to that, it did particularly well for brands where we already see emails do well for them. So the logic there is you then can exclude anyone who's kind of joined those email lists from all of your other advertising ads so that you don't waste spend when CPMs are already higher on them again. So it's like you're kind of removing a pool from your paid media advertising and just targeting them via emails, which is either cheaper or free potentially, as opposed to suffering with the higher CPMs that you're going to have in a week when you do launch Black Friday. So I always am super wary with brands when you do hype campaigns, because you have to structure it in a smart way. It's not enough to just tell people to get excited.
Yeah. I mean, that sounds like there's a lot of sort of core principles there in terms of how we talk to brands about offer construction. And there's these simplistic notions that brands take that when we're talking about offers that we mean discounts. And I feel like that applies most in a period like Black Friday. They just think about, okay, I'm going to do this crazy site-wide discount because that's what we have to do at Black Friday to drive results. Which, speaking of discounts, I don't think we saw many brands going site-wide in our portfolio this year, which I feel like is refreshing and nice to see. Ibra, I think you had a comment around looking at tiers and this kind of thing.
Yeah, I think it comes down to knowing your numbers. So let's make an example, and we're going to keep it really simple, right? Let's assume that we have 10 SKUs, right? Only 10. Now, rules of life, you are not selling the 10 SKUs in an equal manner. Like you always have an 80-20, right? Pareto rule. So you would have 2 SKUs that are driving 80% of your revenue, and then the remaining ones are just driving the 20% of your revenue throughout the year. Now, when it comes to Black Friday, I can't have the same discount on the 10 SKUs, because the 20% that is selling the most would sell anyway after Black Friday, would sell anyway with a lower discount. And in case I'm holding a high number of stock of the 80% of the SKUs where performance is not that great, then I would rather turn this inventory into cash flow so I can order more stock of the 20% that is driving my revenue throughout the year, right? So essentially, performance is one criteria to keep in mind, and stock levels. If my best performing products are low in stock and I can't order right now, or my next shipment is in like 3-4 weeks, so it's going to be for December, I would rather not discount these products at all. Why should I discount them? Like, let's run something different. Let's discount the other products, try to push them, try to understand why they don't work. So that was the logic that we tried to push really hard with our client this year. And we saw it working extremely well for fashion brands as well. Like you have hundreds of SKUs, thousands of SKUs. You can't discount everything the same way. We have cases where we kept multiple collections with no discounts at all, and we still managed to sell them throughout cross-sells in cart or like post-purchase upsells and so on. So essentially, there are ways to move the best-selling stock because it is best-selling and it would perform regardless. So it comes down to keeping an eye on performance and understanding your stock levels so you do not sacrifice margin uselessly. Because if you don't discount, or you don't discount as heavily as you would do on a low selling through collection, you would still sell the best, performing collection anyway. You just would keep more margin in this case. So what we did is we ran the numbers, we analyzed performance in the last 30 to 45 days, we analyzed the stock levels, and we advised based on that. That's essentially how we pushed it with our clients this year. And I reckon it was good success. We were just looking at the profit contribution numbers earlier today was Nathan. And we are seeing an uplift year on year, like 80% of the accounts that we are managing, which is great to see, obviously, because we were smarter when it came to discounts this year, as opposed to how things maybe worked previously.
Yeah. To add to that, I think a nice way to kind of visualize it, because this links quite nicely back to the topic of evergreen content, is if, for instance, you've got your evergreen ads with bestseller products in them right now, and those ads start doing really well during Black Friday, there is that kind of opportunity for a cross-sell, which is nice. So a customer might go on, be sold by one of your best sellers, which is an evergreen ad. And then when they jump onto the site and they're adding it to their cart, they say, I see that there's also a sale going on, and start purchasing some of those discounted products that they may not have been incentivized to buy if they weren't actually on some form of promotion or sale. And now you're also getting rid of any of that leftover stock that was potentially a bit harder to move, and you're increasing your overall AOV. So it's a really nice balance to have. And that's why it's also just like a best practice to have your evergreens with a smart structure like that, where you're only discounting when there's actually a good opportunity.
Yeah. Just one thing to add here. Sorry, Scott, for taking the show slightly from you. One thing that we don't see happening that often is understanding which products gets purchased with other products. So, okay, example, like when you are setting your cross sales or whatever in the cart, it's way more effective to do it based on the data that you have on your store. Users, there are patterns, right? And patterns are repetitive behaviors. That's why they're called patterns. And if like 60% of your new customers buy this water bottle and then they buy, I don't know, this coffee mug together in the same order, you could really assume that if you show me the coffee mug after I add to cart the water bottle, that's like, in 60% of cases, you would end up having an order containing both products. And this is something that doesn't happen this often in terms of analysis and in terms of like data understanding or like data analysis, because first of all, it's quite painful to run this analysis. Unfortunately, like it takes lots of time, and luckily we have internal models that are making our life easier from this point of view. But then once you have this data and once you have the like the relevancy of this data, if you have been running your store for like 10 years, for example, you have a huge data set, and usually you would end up with the same collections being purchased together. Then you can structure upsells that actually make sense, and you would see a massive increase in performance just based on that. We did this already for a few accounts. One of them is like 8-9 figure brands in Australia, where just by changing the logic of the products being recommended in the cart, we increased the gross profit from new customers by 30%, which if you think about it, like such a small tweak that probably took like 5 minutes to implement, providing such a massive delta in terms of financial outcome for the brand, which is crazy to think about, because then again, like it's something that is being done across the board everywhere. It's something that really requires time, and it needs just deep understanding of how e-com works as a business, and also how consumers are behaving on your website. So I think it's an interesting one that we should be pushing more in our content.
And I think there's sort of the last point that you mentioned, and things that didn't work so well, and surprised Nathan called this out in our Don't Panic session that we dropped last week. And then we literally had a conversation with a brand about it on Friday that we'll be starting working with soon with having some issues. So you have this hugely complex amount of data in the back end, which is what we need to process to understand, okay, what is the most effective offer that we can create that's going to lead to that particular purchase outcome. But then the way that needs to be communicated to our customers is really, that's all about how can we remove as much friction as possible. It starts with the creative, making sure that we've got complete continuity between the actual creative through to the offer, through to the landing page that user lands on. And we get to the checkout and our discount codes. Ibra, discount codes didn't work particularly well this year.
Yeah, it's interesting. Like, you can try to make it work, and you will need to spam the discount code everywhere on the website, from homepage, collection page, product page, just to make sure that actually users are remembering the discount code. Make it as simple as possible, like no weird letters and numbers, because no one will ever remember this. Use like promo extensions on Meta and Google, but at the end of the day, the perception of a product being discounted with a strike through is higher than a product being full price, and me having to remember from the ad that if I use the discount code, it will be at 20% off. And then I have to run the math in my mind. I don't know, it's $130 right now. How much it's going to be with 20% off? Like, just, it doesn't create the same perception in the prospect's mind. And there is something interesting on Shopify, right? Obviously, like most of the e-coms, they use Shopify, right? And most of the traffic comes from mobile. If you go to checkout on your mobile, okay, as soon as you land, you will not see where to place your discount code. You will either need to scroll all the way down past your payment methods, all your information, shipping information to find the order summary, or you need to click on something called like show order summary, which is the first thing that you see as soon as you land on the checkout page. Now, for e-com brands that are targeting a demographic that is 40 years old and above, it could be confusing, as in, where should I put this discount code? Because as soon as you land, you have no place to add it. And this could create a high bounce on this page, which you wouldn't want to have during Black Friday, Cyber Monday. Now, there are ways around it, but still, discount code versus strike through, I think strike through would win 9 times out of 10. Let's put it this way. And the one time where discount code would win is like just rare, I don't know, case of just luck and perfect execution and perfect communication, I would say. So you are relying on 3 perfect elements, and not everything is going to be perfect all the time, unfortunately. So keep it simple, keep it easy, and aim to have the highest perceived value of your offer, rather than running a discount code and just trying to, have the user add it at the checkout. Just so much hassle, in my opinion.
I think to add to that, sorry, Scott.
Go for it.
There was one instance where I saw like discount codes work really well during Black Friday, and was pretty much that perfect scenario. And also for context, before I even explain what it was, I was still next year using just discounts in the back end instead of a discount code. The only reason we did this was because this was how the brand knew how to execute it, and during like a crazy and busy period, stick to what you know and how previous discounts have been done if you can't pivot. But essentially, the user journey that they experienced was, you see the ad. The biggest thing on the entire ad was it's a plain asset. It says what the discount amount is up to, let's say, 20% site-wide. And then in massive writing, the code is there and it says what the discount is. Then if the user looks a little bit lower down in the headline, they're going to see that code again. And then when they click on the shop button and they get taken to the website, the automatic promotion on Meta has kept that code for them as well when they're on the site. And then when they're on the site, the banner that says Black Friday has the code in it. And if they go through to the homepage has got a hero image that has got the code in it. And then when they click and they add to their cart, it was a site-wide sale. So it wasn't dependent on different products. It was applicable to any product. So they weren't confused that when they added a certain product to their cart, that product was absolutely getting the 20% discount off. And then when they go into checkout, the code is there. So that was, it really has to be like that perfect scenario. And in that case, it worked well. I mean, that client over 60% year on year. So Black Friday was a success. But next year, I'm going to have a whole year to prepare. And I'm going to say, okay, we're switching over. Like, we're not doing codes next year. It's more complicated. But that's not to say that it can't work.
Yeah, like I was going to say, like I feel like there are scenarios where I could see that working, where a product is extremely viral in terms of its demand, and so the person just like they're going to make that conversion regardless, right? Like you're probably going to see a significant lower drop. And then I sort of mentally go, I'm like, well, if that's the case with your product, why are you discounting it? And sell it at full price because people will buy it if it's that great. So I think that's sort of a simple place to wrap up the elements that we looked at. If we close on one thing, what is the sort of key takeaway from the weekend for each of you this year? What are we thinking about as we head into Q1? What are we pivoting to mentally? We've got all of this data in terms of customers that we've just sold loads and loads and loads of product to. We're now heading into one of the periods of the lowest CPMs of the year. What are we working on next, and what have we learned to take through that period?
Ibra?
Gaby, you want me to go? Yeah, I'm going to go. Good point. Lowest CPMs of the year. That's actually a great point, Scott, because the spike in CPMs this November, year on year, was wild. So unfortunately, many small brands didn't manage to compete during this month. Unfortunately, that's just like, the rules of the game are changing on Meta and on Google. Now, as you head into Jan, it's time to start building for next Black Friday. Time to start populating your lists, time to start testing new offers, new funnels. That's what we're going to be doing. And time to start planning and forecasting how the next quarters are going to look like. That's the best time of the year to do this because, as you said, like usually it's low CPMs, also probably lower purchase intent, after the holiday season, and everyone obviously like the wallet share is not as high as it is right now because everyone between Black Friday, Christmas presents, and so on, things will be slightly slower in Q1. So time to start building for the next Q4, I guess. That's the best time to start doing this. Start building new funnels, start building new strategies on your accounts. So next Black Friday, you can have a scalable account where you can push spend without worrying too much about efficiency dropping, and start populating your email lists. Now, we don't do email marketing, obviously, but it is a strong and important element in what we do. And brands that have a great partner in terms of email marketing are brands where we have a great performance in most cases because it's a massive help. Lots of data, lots of signals for the account, which is something that usually is overlooked, but the signals that your ADMs are delivering on your website are something that your account is using to perform better during these days. So start building this list. Do not just go for cheap leads. Try to have high quality leads. Try to have high quality signups with a purpose, and start building for your next big Q4. That would be like our focus right now in Q1. Obviously, for now, we are still focusing on December, and then Q5, which is Boxing Day onwards. And then Q1 will hit. January, we'll start building for the next Q4.
I think to add to that, and then I'll also drop in some of my insights and where my head is kind of at. But with the email marketing, agreed. Like we don't just see this in Black Friday, but in Black Friday as well. Like our brands that did really well also excelled in email marketing. And part of what we do, we're not just there to convert people. Part of that is lead generation and helping build through pay media those audiences for the email marketing agencies. But I think when I look back at this past Black Friday, the things that I'll remember, aside from like the learnings we've already touched on and the insights that we've drawn from strategy and creatives, is the things that really stood out to me is CPM spiking. So brands really suffered before they started their Black Friday promotions because they were battling those increasing CPMs even in like late October, which was actually the earliest I felt I had seen in a long time. And secondly was also the glitches that we saw occurring on Meta, which were insane this year. Like you start to think that it's just you, and then you speak to everyone else and everyone's battling with the exact same problem. And I don't know if it's because of Andromeda. I'm sure news will come out about what exactly was causing so many problems this year. But it's why... Is Ibra gone?
Sorry, I had to sneeze. I'm sorry.
Sorry about that. Bless you. One of the reasons I mentioned that is not to complain about Meta's glitches. That's part of the job. But to highlight why preparing for Black Friday is so important. And to me, like my head has been in Black Friday since August. Like it's all we've been thinking about. It's all thinking about and preparing for. I'm thinking about Valentine's Day 2026. I'm not actually... Black Friday, November is just where you start to do the manual labor of the work and effort you've been putting in since months prior. And the reason I highlight that is because if you as an agency, as a performance marketer, as someone who's managing a paid media account, if you are not preparing for that in advance, it is going to hurt you so much in November because all of that time that you are spending on putting out fires, which are going to happen, is taking away from your time to strategize. So just something to keep in mind. It's a good lesson to learn for any paid media manager going forward. And then going into 2026, as Ibra mentioned, I think continuing to grow new customers, that doesn't mean you should negate or throw your returning or existing customers to the side, but making sure you're prioritizing both, growing those lists. And one way of scaling that and how I'll be looking at it as a creative strategist is through niche audiences. I think we've all gotten a little bit more comfortable with Andromeda now, and that is through creative diversity. So trying to find what new audiences can you reach or new pain points can you try to evoke to find every possible audience you can within a certain year. And once you've hit that, start expanding and exploring that in different geographies. And through that, you'll get new customers and then reap the rewards in Q4 next year.
Excellent. Well, we'll wrap it up there because that's a great place to plug that if you're looking for a great paid media agency or a great email agency, we are hosting an event on Friday next week in Melbourne. If you are a Melbourne 8 or 9 figure retailer or you're going to be in Melbourne, we will have the details of that event in the link here. You can come and hear Nathan, our co-founder, who's regularly on this show, talk about how we are planning Q1 and looking at creative and acquisition and how you can leverage getting the best out of both of those facets of your paid media through that lower cost period of the year. But we'll also have Angus and his team from MKTG. They are our trusted partner and who we believe are one of the best in the business at email. So come along and hear what they have to say on the topic as well. Ibra and Gaby, thanks so much for joining me.
Thank you.
Stop.